in the name of personal injury law.
There's a new auto insurance law which really impacts what buyers are purchasing for their insurance coverage, but it's pretty confusing. And so today we have Steve Sinas, a personal injury attorney at the Sinas law firm, to help us understand what we have as consumers for our insurance coverage. Welcome, Steve.
Thank you very much for having me. So it's unfortunately a little complicated to understand what your insurance coverages are when you're talking about auto insurance. And the way to really understand it is that you have to pull some documentation that your insurance company has given you. They probably gave you a big stack of documents. It includes an insurance policy, which is very important to understand. But when you're asking what your coverages are, you need to understand what your declaration page actually says, how to interpret it. So we want everybody to grab, if they can, their insurance declaration page, and we're going to try to walk people through how to interpret that here so that they can understand what their coverages are.
So Steve, you've provided me 3 sample declaration sheets, which we'll be showing on the screen at various times, and we'll also be putting them on the website. But I noticed looking at these 3 sheets, and I'm calling them A, B, and C, that there's a lot of things that are similar in all of them.
Yes.
So let's start with that. They all have something called personal protection or PIP insurance.
Right. That is a coverage that defines your no-fault benefits. If you're injured in an accident, you typically turn to your own insurance company. It covers your medical expenses, it covers your income loss to a certain extent, and some household services. That's the no-fault benefit coverage if you're injured. That's what that line item is about.
But Steve, I'm also noticing that each of the samples you provided has a different amount of coverage. So can you explain how that works?
Yeah, so under the new law, you no longer have to buy lifetime medical expense coverage as part of your no-fault insurance coverage. You can cap your medical expense amount. You can even opt out. So you need to look at the line item on your declaration page to see how much it says you have. If it says unlimited, that means you still have unlimited. On some of the examples, it says $250,000. That means they have $250,000 of medical expenses. It can go all the way down to 50, and some people can opt out. So you have to see the additional language about how much coverage you have here to really understand your medical expense coverage.
So for that same PIP coverage, I'm also noticing a difference, which is that some of them are coordinated and some of them are not coordinated.
Right. This is even another layer of confusion. If you have coordinated no-fault, that requires you to turn to your health insurance first to pay your bills. So this is an important issue. If you're injured, you have to know who to turn your bills into. And if it's coordinated, it goes health insurance, then auto insurance. If it's uncoordinated, it goes right to auto insurance. And you have to look at your declaration page to determine what type of no-fault coverage you actually have.
Okay. And then one of the things that's on all 3 sample deck sheets is the liability policy for bodily and property damages. Can you tell us what those things are?
Yes. So liability insurance coverage is the coverage that you have in the event you cause an accident. You're at fault and somebody has a claim against you. And the claims against you now have increased in terms of the amount of damages that you can be sued for under the new law. You were always able to be sued for pain and suffering damages and some long-term income loss. But if people opt out of medical or limit their medical, they can then sue you for their lifetime medical. So liability coverage is that coverage to protect us in the event we have a lawsuit because we made a mistake and hurt somebody.
So with respect to that, there is a difference under that line on these 3 samples about the amount of coverage.
That's right. And so under the new law, they've increased the amount that you have to buy. It's now the bare minimum you have to buy is $50,000, but the default under the law is $250,000 of liability coverage.
So we want everybody to have more coverage.
Right, because they
Right.
can be sued for more.
Right.
But you can lower it below $250,000 all the way down to $50,000 if you sign a form that we're going to have on the screen that your insurance company has to have you sign. It informs you of the risks of going with that low level of coverage. But if you sign it, you can go under $250,000. The amount on the deck sheet tells you how much coverage you actually have under your own policy.
But everybody in the state of Michigan has to carry at least $50,000?
Yes, is
Okay.
the bare minimum.
Okay. Well, a third type of policy that I'm seeing, or coverage I'm seeing that all 3 of these deck sheets, is the uninsured and underinsured motorist coverage.
That's in the event you're hurt by someone else. It was their mistake, but they don't have insurance or enough insurance to cover your damages in a lawsuit. Your insurance company stands inside the shoes of the at-fault party and pays you as if it was the at-fault party paying you. So that's a really good consumer protection you should buy yourself. And there are differing amounts, as you may see, right?
Yeah, okay.
You should buy more, is the bottom line. You should have more liability insurance coverage in the event you make a mistake, but buy more uninsured, underinsured coverage in the event someone else makes a mistake and also adds insult to injury and doesn't have enough insurance coverage. So increase that if you don't have enough.
They're not doing what they're obligated to under Michigan law, or they're from another state.
Whatever it may be, protect yourself by buying more of that type of coverage.
Okay. So another coverage that is on all three of the forms is something called limited property damage.
So there's a limited right to sue an at-fault party for your vehicle damage. It used to be limited to $1,000. Now under the new law, it's $3,000. So if you wonder what that's about, it's about in the event you cause a crash, you damage someone's vehicle, they can claim up to $3,000 from your insurance company. That's what that covers.
Okay. And then there's something called comprehensive insurance?
So when you see comprehensive or broad form, that's a coverage that applies to your vehicle in the event your own vehicle is damaged. And the differences between comprehensive and broad form are a little bit varied here. And the bottom line is that when it comes down to it, you want to have some type of coverage for your vehicle because you want to make sure your vehicle can get paid for if it's damaged, and coupled with the reality that the at-fault party is only limited to $3,000 of your vehicle damage. I've had a number of cases where people say, well, I didn't buy the comprehensive coverage. I don't have collision coverage. My vehicle damage is $10,000. I only got $3 from the at-fault driver who's paying my $7.
Mm-hmm.
You only have a source of recovery if you buy some type of collision coverage in that regard.
And property protection insurance, does that cover the same thing?
So if you're in your vehicle and somehow you're in a crash that then results in building damage, so you go off the road into someone's house, right? Okay. Or crash into a building, whatever it may be, those are claims that are called property protection claims, and your insurance company has to pay for those damages if it involves your vehicle. And typically, there's some nuances to that, but.
Okay, so property damage liability that we talked about earlier and the comprehensive broad form have to do with vehicles.
Right.
The property protection has to do with other types of property that might get injured.
Right.
Okay. And then there's something on here called the MCCA.
Yeah.
Deficiency recoupment fee.
Yeah.
So tell us what the MCCA is.
The MCCA, it stands for the Michigan Catastrophic Claims Association, is a reinsurance fund that is there to actually cover the lifetime medical care expenses we all have had under the original no-fault law. Now we can buy less than lifetime. When we do that, the MCCA has no obligation to pay for anything just because of the way the law is established in terms of when they have to pay. And so the unfortunate reality for consumers, though, is that the law still allows the insurance companies and the MCCA to charge us a fee even if we buy less than lifetime and don't have any rights to claim benefits through the MCCA. So you may ask yourself, what is the MCCA doing for you? If you're injured in a crash and you have less than lifetime, the answer is nothing, but you still need to pay this fee that's part of its history as this reinsurance fund that the law still allows to be passed on to consumers.
But really the recommendation is to buy unlimited lifetime benefits, and that way the MCCA is going to be on the hook for damages that go above.
Right, and you then are fully covered. Okay. You are fully covered with unlimited lifetime no fault.
Thank you, Steve. That was so helpful. If you haven't found your deck sheet yet, go ahead and find it and then watch this episode again online, because I think it'll be really helpful to you to understand it while you're looking at your deck sheet.
And we'll have additional resources online for you to look at too.
Okay.
In the Name of Personal Injury Law is brought to you by the Sinas Law Firm.